Welcome to the latest Motley Fool scoreboard. I'm on in Chocolate Balloon. We've got longtime fools, Travis Hoyam and Matt Frankel, giving a 1 to 10 rating to a Moneyball wreck. It's Intel, ticker symbol INTC. Rate the strength of Intel's business, including factors like industry and competition. A 10 is invincible. A 1 is hopeless. Matt's at an 8. Travis, you're at a 5.
Yeah, the sentiment around this stock has absolutely shifted. Over the past year, shares are up 361%. And you can really tell that, the market's starting to think about this company completely differently. But you actually look at the numbers and where they are strategically, I don't think a lot has changed. And, they did have an operating profit in the most recent quarter if you pull out some of their restructuring costs. But that's because they were selling chips that they had previously written off as not valuable at all. So there's so much demand for CPUs, GPUs, but like CPUs are the hot thing in artificial intelligence today. Does that mean that they're going to be able to sell, chips out of the garbage can next quarter? Probably not. So this is kind of like a one-time benefit that I think we're seeing in the market. I fundamentally don't think that we've seen a massive shift in Intel. And you're paying over almost $500 billion for a company that still has a lot of strategic and technological challenges going forward.
Yeah, I mean, I gave it an 8. I see CPUs as a little bit more of a long-tailed opportunity, and I mean like multiple years, in other words, in the next phase of the AI rollout. Intel is still the leader here, although it has been steadily losing share to AMD for years. The foundry business is unique, especially it's the only real big one on U.S. soil. The relationship with the U.S. government is a real strength. NVIDIA has a good relationship with Intel. Relatively low margins for a semiconductor company, but I didn't factor that into my business score. That we'll talk more about that in financials.
All right. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Both of you have 7s, Travis.
Yeah, Lip-Bu-Tan is now running the company. I went with a tentative 7. Lots of questions about what they're going to do in the future. Lots of, the previous management, Pat Gelsinger, was trying to basically split the company without splitting the company into a design business and a foundry business. Now we've kind of gone back on that a little bit. They want to be able to make more of their products in-house. Maybe that'll be a decent strategy now that CPU demand seems to be soaring. But there's still just so many questions about who wants to work with Intel. Right now, Elon Musk, Tesla, SpaceX, XAI consortium is doing something with Intel. We don't know exactly what that is or what the structure is going to be of their terafab. So I just think there's so many questions. I would like to give Lip-Bu-Tan the benefit of the doubt, but it's got to be a tentative score because this may not work out, just like I think Pat Gelsinger had the right idea. It just didn't work out for the company.
Yeah, I give him a 7. I would give him a 9 for his first year. I can't point to a bad move that he's made this year, but it's only been a year. It's pretty much spent it cleaning up what the bad moves of last management. And he called 2026 the execution year, and then I think 2027 is the growth year. So there are a lot of uncertainties, kind of like Travis just mentioned. So that's why I gave it a 7 altogether.
For financials, a 10 is a fortress, a 1 is yikes. Matt's at a 6. Travis, you're at a 4.
Yeah, you look back on their business. I mean, I mentioned the selling older chips. That's only a tailwind for a short period of time. So that's something that's helped them recently. But just looking back at their gross margins, Matt mentioned this, but 2017, their gross margin was 62%. In the most recent 12 months, that gross margin is 35%. We want to have companies that are moving in the opposite direction. You look at NVIDIA, their gross margins, their operating margins have exploded. Intel is moving in the opposite direction. So the strange thing, we'll get to valuation, but the strange thing is that the market is taking a really optimistic look on a company whose financials are absolutely heading in the wrong direction. But that turnaround is already priced in.
Yeah, I said a 6. They do have lots of cash on the balance sheet from the government, from NVIDIA, from SoftBank, but it's flowing out the door just as quick, or even quicker, really. I mean, negative free cash flow, including all these, the CAPEX, decent margins, but like Travis said, they're improving a little bit, and not the best balance sheet other than just the cash that is going to be gone in a little while. The metrics are moving in the right direction in a lot of ways, but not the most financially sound chip maker in the space.
Matt, let's talk valuation. How well will Intel stock do over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I said 0 to 5% with a safety score of 5, which is probably the lowest combination I've given in a while. And it's mostly because after roughly quadrupling from its 52-week low, I'd say pretty much 2 or 3 years of good execution is already priced into the stock. Great earnings report recently, which gave it another leg to the upside, but it's trading at an extremely high valuation. Intel could still be a winner from here, but I'd say it's a very fragile business at this valuation, a fragile stock rather. There's little room for stumbles baked into the stock price right here.
Yeah, the enterprise value to sales is 9. If you look over at TSMC, which is arguably the best operator in the space, they're turning almost 50 cents of every dollar of revenue into net income. They're trading for about 15 times sales. So, the whole space is expensive. The reason that I did give a positive return score is because it's very possible that over the next few years, we are just so chip constrained, so semiconductor constrained that just having fabrication facilities, just selling anything that the market can buy could be a good position to be in. It's also possible that over the next 5 years, we go to a bust phase where we know that supply growth is increasing across the industry. Does that demand growth continue to outpace supply growth? If that starts to turn, then the weaker companies are the ones that are going to take it on the chin first, and that's going to be companies like Intel, at least based on what we know today. So I do have a positive expectation of 0 to 5%, but also a very low safety score of 2 because the variance here is extremely wild for management. We could see shares double, even just if it becomes more like a meme stock like we've seen recently. It could also drop 60, 70, 80, 90%.
Thanks to both Travis and to Matt. They've given Intel a low overall score of 5.0 out of 10. Scores were kind of low to begin with, but valuation also played a huge part. Matt prefers AMD for our top it, and Travis prefers Taiwan Semiconductor. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is Taiwan Semiconductor. Till then, Fool on.